Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and as I like to remind you each week, I'm also the author of a newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, and my partner, Chen Lin, is the editor of What is Chen Buying, What is Chen Selling, and to subscribe to either of those newsletters, go to miningstocks.com. Let me welcome Michael Oliver. Thank you for joining me again, Michael.
Hello, Jay. Good day.
Really good to have you here. Now, you've been pretty constructive on gold. You've had the feelings, not the feelings, because you don't operate on feelings. You operate on your momentum and structural analysis, which is devoid of feelings. But you have a friend of mine thinks that buying gold at this level is very dangerous. He's looking at sentiment, and he says all these sentiment readings are showing people have suddenly become extremely bullish on gold. And he notes also that the commercial shorts, the commercials have huge short positions now, and more often than not, what J.P. Morgan wants, J.P. Morgan gets, and so, some of these same people are still insisting on $1,000 gold, but I don't think you're buying that, are you?
No, I'm not buying it. I don't usually pay much attention to other methodologies. Over the years, I've developed the MSA methodology, momentum structural analysis, and I try to blank out contrary opinion type things, the consensus reports that you hear about bullish bearish consensus and so forth. And I find it almost laughable that early in a bull market, and I think we entered a bull market in gold when we came through 1142 through 1169 price 3-4 weeks ago. That was my bull signal. It broke out annual momentum and quarterly. It said lights are green, that's the bottom. Okay. Now, then suddenly, a few weeks later, all of a sudden I'm hearing the type of sentiment that you hear around tops. I dismiss it. I think it's way premature to be looking at sentiment. Short term, yes, it's built up some bullish consensus, but I think that more likely what's going to happen to gold, and I said in the weekend report as well, you're going to get a congestive phase. And instead of a retracement phase, you'll get a congestive phase. And that's exactly what we've had for the last 4 weeks, where we're oscillating in a $30, $40 range, but never going too far from the high that we reached at 1260. We did have one quick pullback right after we made that high that got back into the 1190s, but that lasted all of several hours, and then they immediately gobbled it back up, and gold is now nestled into the 1220 to 1250 zone. So I don't buy into that. I'm not concerned about that issue of contrary opinion.
All right, then eventually, I guess those that are betting on 1,000 or below 1,000 are going to give up and probably turn around and go in the other direction.
Report after report for the last few years have been betting against the $1,000 crowd.
Yeah, I know you have.
Get it. And I don't think they've got it, and I don't think they're going to get it. I think they've missed their chance, and if they don't watch out, they'll miss the move.
Okay, well, let me just ask you about the equity markets then, where my friend also thinks that people are too bearish on the equity markets and looking at sentiment for the equity markets. What's your take there?
My take is that as of February 12th, it's Friday several weeks ago, S&P had closed that week at 1860 area. I put out a report that was entitled with bold print, "Beware." And the intent of the report was to explain to shorts that you're subject to having some of your profits taken away. We recommended shorting at 2043 price and 1952 price, two different levels in the S&P. And they've defended the market in the low 1800s a couple times now, low 1820, 1810 zone. It's a flat floor there on a price chart. This rally, I think, will run out of steam shortly, time-wise. It might extend on up to 2000 or 1980, something of that sort. I think we've been in 1970s today. I'm monitoring very short-term momentum technicals now for the sign of a downturn, and I don't have it yet. Mm-hmm. So as far as I'm concerned, that the green light that flashed in mid-February that said you're going to have a bear market rally, which is what I think this is, still green. But it's getting old, and I'm seeing signs at the margins that it doesn't have much more time left to it.
Mm-hmm. All right, good. Well, you had, before we went on mic here, you said you had some comments on the Canadian dollar. You just share those with us in the last minute and a half we have done.
That's an important thing because it's tangential, just like the yen was. I got bullish on the yen last year, and it's had quite a big move. The euro has been dead still, so there's nothing going on there, and therefore the dollar index is dead still. But the Canadian dollar topped with commodities back in 2011 and dropped hard with commodities. And that makes sense, Canada being a commodity country. The Canadian dollar is turning. I use futures, but they reflect cash. 74.5 cents area right now. I've already broken out enough on some quarterly momentum and annual momentum to think that we've probably got the turn underway, but I'll be fully convinced of a bottom and an upturn in place if in any month during the next quarter, which is, April onward, you close out a month where you are right now at 74.5, and this beast is gone. It's going up. And now, So what? We either be long the Canadian or take that information and apply it broadly. And I think what it says is that's further evidence of a commodity bottom and a commodity upturn.
All right. Well, that's a good place perhaps to leave it, Michael, because it might segue us very well into our next guest, John Williams, who is on the inflation side of the argument, has been continuously. But we'll see. I mean, there's asset prices. You're looking at a downside big time, I think, still for a lot of the financial assets, but perhaps a turnaround in the commodities, right?
Correct. I think everything is juxtaposed. Everything is upside down now.
All right, very good. Well, always interesting to talk to you. I just can't wait to get your missives as they come in the email. And folks, I didn't tell you, but again, it's MSA. It's OliverMSA.com. OliverMSA.com to learn more about Michael's work and hopefully take out a subscription to his excellent service. Thank you very much, Michael, for being with us, and we'll look to do it again.
Thank you, Jay.